Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, December 4th, 2020. What I'm going to do is a quick update on the broad markets. We're going to go back out to the 60-minute charts. I haven't really visited those in a while. Really haven't been any nice setups for swing trading in quite a while. Well, quite a while, relatively speaking. A few weeks now, we've been grinding higher. Without any clear developments, clear levels to watch. But as if you saw yesterday's video, you know, for the first time in a while, in over a month, we finally reached those levels. We're at that area, that range where was favoring the markets going to make those marginal new highs. So again, that's back on the daily charts right here. So we put in those marginal new highs on the S&P 500 as well as the NASDAQ 100. And although I don't have a hard level, I don't have any resistance levels in which to target. I feel pretty confident that we're there within. Hard to say an exact percentage numbers, but let's just say a range of anywhere from, right about where we're at up to maybe 5, 6, 7, 8% more, not even 8. I'd say probably 5 to 6% upside is most likely. So therefore, as I said yesterday, one could take an aggressive short entry as a swing trader, but I'm going to give you some levels to zero in on if you want to increase the odds. To take a shot now would be a pot shot. You're going counter trend against the trend with the zero sell signals. So let's get back into the 60-minute charts, something I normally cover a lot more, and I've marked up some levels for anybody that wants to, anybody interested in swing short trade here on the markets. You can go long too. You can buy the dips on these same levels. I'm highlighting support levels, price support, trend lines, and so if you're bullish and thinking this rally has a lot more legs to go before a tradable correction, then you use these levels in reverse. So whereas a short trader would wait for, here's what I think would trigger an early sell signal, this minor uptrend line in SPY. Not very well defined after that. And so what I'm highlighting here are support levels. Again, you can go long on pullbacks to support or short. This one's really nice. The second line here, you have a secondary uptrend line and the 362.44-ish level. Here, I'll zoom in a little bit more and you can see it right there. That's 362, give or take around 44. It's the bottom of this recent gap. So if you're trying to replicate this chart, there's a gap from, let me put the crosshairs, remember we're on a 60-minute chart. That's Monday, Tuesday's gap. We gapped up on Tuesday morning. So the bottom of that gap is decent support, and it also comes in around the trend line. So this is what I'm looking at. Early sell signal, again, you can take a pot shot. I'm starting to layer in, and you can take a, pot shot position here with stops wherever you're comfortable with. Whatever you're targeting on the downside, you can allow a wider stop. You want to go real tight, maybe 2-3% stop above where we're at, or even go really tight if you want, 1% stop. Tighter you go, the better the odds are that you may get your stop clipped even if the trade does play out. So again, no sell signals. But if you want to start there, then a break of this trend line, ideally if it's impulsive and if you can get a 60-minute close, that's all the better. Come down here, we'll probably get some buyers stepping in around that 362.44-ish level. Again, that's Monday's close, the bottom of Tuesday's gap. And if and when that goes, I think it'll open up a move down to at least this support zone or target zone right here. That is about 350, 360 down to about 350. We'll call it 350.09 or whatever. We'll have it right about there. Okay, so that is a potential target zone. Definitely a counter trend trade. I imagine majority listen to my voice will pass, and hey, it may not play out. Counter trend trades have a much lower rate of playing out, even when you have divergences and everything else. But I wouldn't be doing the video if I didn't see these, for the first time in a while, starting to warm up to maybe, again, swing shorts, not just quick hit and run in and out trades. Why? Well, you look at the divergence we have. We had small little bit, last time we had 60-minute divergence, it was only on the PPO, and it was right here, and there was a quick trade, a quick pullback trade to be made. You had a very steep uptrend line, and from the time it broke that trend line, that was your sell signal. I'm not going off the highs, I'm going from where we broke down. That was a 3% drop. It was quick, you had to get in, get out. Small divergence equals relatively small correction. However, now that same divergence that started here on the PPO has only extended. In other words, grown much larger, and we also have for the first time in quite a while, divergence here on the RSI as well. So that's it. We had some divergence back here, and where sometimes these lines just seem to disappear, but there should have been a divergence line right there. There was a divergent high, one of the biggest ones we had in a while, and that was followed by a 11% drop in the S&P 500 or SPY right there. So there's your near-term targets and levels. And again, if you're not an aggressive trader, you want to wait for some sales signals on the daily chart and the trend to reverse, that's nothing wrong with that. QQQ, we have an even a little bit better defined trend line. Here's our trend line. Forgive me, I haven't cleaned up. I have a lot of old levels on this chart of QQQ, but I'm going to use this drawing tool with this blue colored line to show you what I'm looking at. Similar to SPY, we have some pretty big divergences forming on the 60-minute chart here. You also have the RSI in overbought territory. Overbought is typically considered 70 or higher. You can see here I have a line at about almost 80. It's 79.74, and that's typically where QQQ gets checked. What do I mean by that? Let's see. If I turn off all the lines, that line goes away. But here I'll just circle it here. Again, kind of a busy chart, but I'm going to leave these annotations up. All right, boom. Boom. Okay, drop. We hit it here. Drop. Tradable drop. On those, keep in mind, we're in an uptrend. We hit it here and then came very close again, but put in that negative divergence. So a tap, tap, double tap, and it was a second double tap. We had a little pullback after the first one, but boom, there was the biggest drop. Went on to hit my first, second, third, and fourth targets. I had a potential fifth target there, and we came between that fourth and final target and that potential fifth target. And then from there, we put in, you got it, positive divergence. That's what I like to look for on the 60-minute frame. Nice bullish falling wedge. It was pointed out at the time before and after it broke out. Positive divergence was the catalyst for this breakout and this rally, which is still going. That's an uptrend right there. So there's the uptrend from that 60-minute divergent low. And again, we've come full circle here. We did have, if you're trading actively, there was a small divergent low right there. That was a catalyst for this rally, or really the one that's still going on. And again, just to reiterate, we have for the first time in quite a while, this was big divergence building back here. We had comparable divergence. See how we were pinning up against that 79-ish, 80-ish level. So I just wanted to point that out. And that sets the stage for potential swing trade. Where to? Good question, because I didn't mark this one up as well. But I do have first support. Let me turn this line up a little brighter here. There is a gap above it. I'm not even going to focus on the gap. You can see, there's Tuesday's gap. I think this is a better level for a minimum target, and that's we'll call it 298, because I have the line at 297.92. So let's just say, again, should a sell signal be triggered with a breakdown of this uptrend line? There it is, 298. What would that mean if it happened today or Monday? Remember, today's Friday. That's the other tough part. You get a breakdown today. You have to, as a swing trader, you have to make a decision to take home a short. If you take a short position today, you're going to have 2 extra days of overnight risk. So it is what it is. Markets could either gap up or gap down Monday, and that's again assuming we get a sell signal. Just to be clear, we don't have any right now. We are in a near-term uptrend and an intermediate-term uptrend. First target, and then from there, I'll tell you what, let's just see if we even get a sell signal, and then we'll go from there. I'd say second target about 293.40, and again, what would that be percentage terms? We're talking, again, minimum targets here. So you're looking at about a 2.25 to down to about a 3.75, almost 4% drop to that second target right there. And with these divergences, there's a potential for a whole lot more. I'm just looking at some of the very near-term levels. So yeah, if we get the sell signals, I will provide an update. And then I'll also post I'll clean this chart up and give you guys targets for those that even care to short. I know right now, probably quite a few people rolling their heads thinking I'm crazy talking about shorts, but it's been a while. Like I said, we hit those intermediate term marginal new highs I was looking at. So we're in that range where I think we put it. And again, I have to keep looping back. I'm just spent 5+ minutes talking about the 60-minute charts, very near-term outlook, short-term targets. This is the daily chart, and this speaks, to the bigger picture, which says if these divergences play out, and there's a trend line right there on QQQ on the daily chart, and that's what a less active trader, a swing trader, maybe even somebody long riding this trend up, wondering when to pull the plug. I think if you see a solid break, big red candle, especially a daily close down below that trend line, that should do the trick, and that could bring us back to these targets. T1 right here. I may modify that, but 283, 275, and then down to about 264.80 or so, the bottom of that recent trading range we've been in for the last several months. Futures traders, this is NQ, NASDAQ 100 E-mini futures. There's your uptrend line, 60-minute chart. That uptrend line generates off the about the November 23rd lows, give or take. There's the dates down there. Enough reactions to help it validate the trend line. 1, 2, 3, 4, now 5. Divergent high at the most recent high. Here's your divergence lines. Right here, price is wedging up, making a higher high with the indicators making lower highs. There's your negative divergence, and again, sell signal there. I wouldn't even call this a first target because it's so close, but you could. If you're a very active trader, you're respecting this uptrend, you're respecting the uptrend, but you do want to just game a quick pullback trade. 12,405, we'll call it, would be my first target. It's not much, but if you trade NQs, that's about what is that, about a quarter point? No, about 3/4 point drop. Yeah, three quarters of a point, which is a very profitable trade if you're especially if you're day trading NQ. So there's because you can take a larger position size. Swing trading, I take lower position sizes because I have the overnight risk. Day trading, you can take a larger size. All right, next target after that, 12,307, pretty well defined. And then somewhere about, I may have to tweak this line, but right now I'm going to leave it here at about 12,117. So there's some potential near-term targets if we do get some sell signals on QQQ. And what you want to do as well, whether you're trading NQ or trading SPY, you want to see the more of those that break down. What I'm talking about are both the futures, and I'm focusing in this video on the large caps, S&P 500 and NASDAQ 100. So I already covered the levels on SPY and QQQ. So ideally you want to see both of those two break down, SPY and QQQ, and then also you want to see the futures break down. And it probably will happen. They'll probably all happen around the same time, but sometimes one or two will break down, the others hit support, and then the buyers step in. So that's why you want to increase the odds. So maybe you take an early position on a breakdown here, add to it once 12,404 goes, and if that happens, you'll probably see the S&P 500 also break those levels I covered. Which one more? We have ES. ES are the S&P 500 E-mini futures. Here's what levels I'm looking at. This is a 60-minute chart. I can bring it in a little bit tighter. Let me do that for you here. Sometimes I forget you guys are watching this on a video. I'm looking at it at a pretty good size monitor. Divergence has been building and pretty big, much bigger. Last time we had negative divergence on the 60-minute chart, I overdid that line. It was right here. It was small divergence, but yet it led to a nice pullback. You had a very well-defined uptrend line. That is a bearish rising wedge pattern, and that divergence resulted in a drop of about about 2.5%. Let me move that line. That was just to measure it out. Now this is a much larger divergence that's been building, and therefore my expectation would be more than a 3% drop. There's your negative divergence. Here's a minor uptrend line that should trigger the selling to kick in if we take it out with conviction. First support, or you could target, is about 36.44 or so. Next level, some give or take around 36.17 right there, and then there's this uptrend line that would be my near-term swing target. Should that uptrend line be hit, you're talking a drop from where we're at now. Again, that assumes a breakdown, or reversal from here, but that would be about a 2.5% drop. So again, very near-term stuff, not big. Not huge for a swing trader, but if you trade futures, again, you get 2.5%. And, if it happens, it'll probably happen relatively quickly. That's good. And then should we even get those sell signals, which we don't have, then we may zoom out to the longer term charts, the daily charts, and revisit the 60-minute charts and maybe look to see what might happen. If it looks like we're going to get a break of that trend line, that would open the door to even bigger targets. As of now, trend is up, no sell signals, but there's what I call trade setups if anyone's interested in those. Let's move on. Okay, and just want to do in the second half of this video now, that's the equity markets, and I want to follow up on gold, completely different asset class. I want to show you what I see there, quick update. Okay, so on earlier this week, I had a post, time to start buying back into gold, and that was right here. So far, so far, I can't get too excited. It's not that big a bounce, 5% or so, but we nailed the bottom on the entry, and that's a buy zone. So if we take another leg down, which is possible, I maintain, you can continue, scaling in anywhere from here. You can scale in strength. We may not go down to the bottom of that buy zone. That's just where I would scale in. Very, very good support if we get down there. So if gold, and I pointed out the other day, if you're an active trader, and you want to take the quick 5-6% profit, or it's almost 10% on silver, then you'd want to sell just shy of that 173.78 right here, this line, this resistance level, and that's where we came today. We had a high of 173.32. You got to put it. You don't go in 2 pennies low on a $174 security. That's what I call stepping in before. So that's about where you would have booked profits today. Again, if you're an active trader, it is resistance. But if you're a long-term investor, and that was the primary focus of that post, is hey, time to start scaling back into gold for a long-term trade. And that was after posting back here, scaling out and closing out long-term positions in gold because a correction was likely. So there's a correction. Nothing's changed. I'm viewing that as a healthy, normal bull market correction with the next leg up to come. Whether we go down a little more before then or not, that may be proved to be the bottom, or bottoms are often a process. We'll see. But so far, so good. The fact we reversed off the top of that support zone, and it's been pretty impulsive buying. But I wanted to cover a few other things. So, all right. So I also shared this chart. That was my pullback target zone from way back here. Maximum, your whatever preferred pullback targets right there, just above that 164.80 level. We got that, but I want to show you the euro US dollar. Okay, so I've been focused on this a lot. This went into my analysis, back 4 months ago for closing out those gold and silver and gold mining positions, those mining stocks, the fact that euro US dollar hit this long-term downtrend line. Then I pointed out recently that we broke out above it, and today's Friday, so we are going to clearly close the week with a solid breakout. That's unmistakable. We also took out that previous high right there that we had an intra-week break. So this is a breakout. Any way you slice it or dice it, this is a weekly chart, and now we have a solid weekly candlestick close. So that's the good. You want the bad. It's not really ugly, but there are potential divergences on the daily and weekly time frames. This is the weekly, and you can see here, let me zoom in a little bit, potential divergences. I call them potential because the PPO is a momentum indicator. It's turned back up. It's pointing up. It could continue up, and the divergences would be taken out or burned through. However, should we get a pullback soon, and I laid out a scenario that's possible. We run up, we reverse soon. That's going to give us negative divergence on this weekly time frame. And it could happen soon, or it could happen after we hit my next target here at 126 and change. Or we may never, pull back. I just wanted to point out that it's not an all-in moment for gold. That's what I'm trying to say here, because we do have the breakout in the euro US dollar, but the main trade for me, I'm not a big forex trader. I can trade them once in a while, trade E7 or DX, those dollar futures or euro futures or any of the ETNs, depends. But remember, gold is what we're after here. Gold, silver, the mining stocks, they all move together. And gold is still very much off its recent highs. And no buy signals really on the weekly chart. We're not going to get that weekly bullish engulfing candle. Doesn't look like we're going to get it today. And you can see, again, we ran right up to that. We hit a high today, close to that 173.87 resistance. So that's it for now. Gold had a nice pop. Still looks promising. I'm still longer term bullish on it. But until we take out the highs, it's way too early to say if this is simply what I believe it is, a correction in an ongoing bull market. Nothing goes up forever. You always have corrections like this. You had them in the last bull market right there. Comparable corrections that lasted about as long. Here's one back in 2009, late 2009, early 2010. And of course, several others out there. So, all right, so we'll leave it here. And again, until we power on up and take out that high, and that would be a big breakout, by the way. And it was the same reason recently for closing out those positions. That was our previous bull market high back in 2011. That's a major reaction high. Now we've already tested it and had a pullback. Should we go on to break that out, which I favor, that's going to be a powerful breakout for gold. That'll put gold at all-time highs and open the door, I think, for another leg up. So we got some work to do. That's my point, is we're still well below those highs, and just because the euro's broken out doesn't mean that gold must go higher. I'm going to talk about that now, and we'll wrap this video up. Okay, so let's talk about the euro and gold. Euro US dollar. Okay, what we're looking at now, we can do this with the US dollar only. I like to use the euro US dollar pair. What you're doing is you're basically flipping the dollar upside down. If you use a dollar, let's say UUP is a dollar ETF, there's a dollar. So when the white line is going up, the dollar is going up, right? And when the white line is going down, the dollar is going down. And so gold tends to move inversely to the dollar. In other words, here's gold rallying, there's a dollar falling over that time period. There's gold falling, there's a dollar rallying. Okay, but I'm going to do it this way with the euro US dollar pair, which flips the dollar upside down. What I mean by that? Well, we're looking at gold as the yellow line or gold line there, and the euro US dollar pair is in white. And so just remember, once again, the euro is the biggest component of the dollar. Therefore, when this is going up, the euro is climbing against the dollar, it means the dollar is going down at the same time. So whereas gold and the US dollar have an inverse relationship over time, and this is what I want to impress, over time, long term. That's what we're looking at here. This is a weekly chart spanning all the way going back to 2008, as far as I can go, as far as the data populates here for the euro US dollar. And when you look at the larger picture, the trends, you will see that there's a positive correlation here, because again, we turn the dollar upside down. So what do we have here? Well, here's how I look at these correlations, because I think sometimes it might not be so obvious when you look at the chart. There is a major bottom in gold, a major inflection point, and you also had a major bottom in the euro US dollar. So both rallied. Now there was a correction here in the euro US dollar pair, and gold continued to march up, but then that was short-lived. Then they both started rallying again. So this is what I talk about. There are periods, and those periods can last months, many months, where the dollar is falling, but gold's not going down. In fact, the gold may be falling. But when you look at the bigger picture, you can study this chart on your own. Look at the major inflection points. Major top there in gold, major top in the euro US dollar, and they both fell, okay, from there. And they continue to fall. Major bottom right here. It's really a double bottom in the euro US dollar, gold bottom right there, and then they rallied, okay. They're peaked right there, both fell. This was a period of disconnect right here, and I talked about it, and I said gold would likely play a game of catch up, and it did. So then this is the euro US dollar rallying, there's gold's rally, and then most recently, this is where right here where gold peaked, and that was that point where the euro US dollar ran into resistance, that long-term downtrend line, and gold also hit resistance, and silver hit resistance, everything I covered before. And here's what's happened now. Okay, so the euro's broken out. It means the dollar's broken down. The dollar's at multi-year lows, and gold just started to rally, but gold has a big game of catch up. This disconnect can last for some time, or we may see gold once a lot of eyes realize, hey, the dollar is falling, euro's rallying, gold should be going up. That's the most likely scenario, but I really just wanted to show you here, these major inflection points, and the fact that it is undisputable that over time a rising dollar is typically bearish for gold, and a falling dollar is bullish. And it's very simple. The gold we're trading now, you may be in some other country around the world, European, you're trading gold in euros or yen or something else. But the gold we're trading, gold futures, GLD, the ETF, they're priced in US dollars. And so it's very simple. When the dollar is weak, if the dollar drops 10%, it takes more dollars to buy an ounce of gold. If you hold supply and demand constant on gold, then it's going to cause the price of gold to go up. Likewise, when the dollar is strong and rallying, if you have a big increase in the dollar, big gain, it takes fewer dollars to buy an ounce of gold. So that's why you have that relationship. It's really not rocket science, but there are other factors. If it was, again, if supply and demand were held static in a vacuum, it would be a perfect inverse correlation between gold and the euro US dollar. So I just want to point that out, because every now and then someone will say, hey, well, Randy, they don't always move up and down. This to me is unmistakable. Again, you want to look at the inflection points where both peaked, in the major trends, and recognize that there are periods of months, could be 6 months or more sometimes. Usually it's only a few months at most where you see the two disconnect. So in summary, we have a clear breakout on the euro US dollar. That's bullish. There's the euro US dollar on a daily chart right here, and there was positive divergence right here that was a catalyst for the breakout. But what we need to pay attention to now, I showed you on the weekly chart, and here it is on the daily chart. We have potential divergence. It's not confirmed. If we reverse soon, PPO crosses back down, we could confirm that divergence, and what that may lead to possibly would be a back test of this trend line, and that could cause gold to have another leg down, and maybe we then pick it up at a lower price at the bottom of our trading range. So that's why I'm not all in bullish on gold yet. I'm starting to accumulate it. I believe downside is limited. I think at worst we come back here and back test the trend line, or maybe a little overshoot, and I'm still longer term bullish on the euro, longer term bearish on the dollar, longer term bullish on gold and the miners and the metals. Okay, we'll wrap it up here. We'll get the video out to you guys. I'll let you know if I see any breakdowns in the equity markets, any of those sell signals that are potential. Again, that's just a setup. And I plan to do another video today. I want to cover the financial stocks. I'm seeing some interesting developments there as well, and I'll follow up in a separate video. This has been Randy Finney with Right Side of the Chart. Have a great day.